I'm Catherine Ross, live from the NYSE, and we're here with Jim Cramer. Jim, we have a lot to cover this morning. For those tuning in, we're looking at the top headlines moving the markets, more bank earnings, and the latest Huawei news. Jim, let's just dive right into it. What headlines are moving the markets right now?
Well, right now on the Dow, the Goldman is coming down. I think that Goldman was up 4 on Friday. I didn't want that. We went for the trust. Goldman now giving up a lot. I continue to think that it's just too cheap. Looking to buy some. The president saying what he did about the Fed, I think it's starting to make people too worried that the Fed is going to be too political. We're starting to hear about that. I also feel that we have to recognize that we've had such an up move, and we've only had J.P. Morgan, Wells Fargo, which was very bad, frankly, Goldman, which I didn't think was as bad, but it ran, and Citi, which I thought was quite good. So that's it. We're basing it on nothing. And I think people just feel we went up on, and J.P. Morgan was not bested. Then maybe Bank of America tomorrow won't best it. I think that Morgan Stanley will, but we have a dearth of information that we're trading on. We did get a couple of big deals. Waste Management spent $4 billion, and stock went up. It was downgraded on Friday by someone I think you didn't recognize. Jim Fish is Wiley, the CEO. So there's not a lot to trade off of today, and I think that it's what I regard as being an unimportant day.
Now, we'll dive into bank earnings in just a moment, but I want to circle back because you wrote about the Fed and why they shouldn't tighten in your real money piece this morning.
I just think that there's way too much will they, won't they, when they just told you they won't. And there are many too many commentators who are asking them about any good data and why they shouldn't move, when the overall, and I pointed out, the overall data is simply not as good as it was. So, yes, it's great that we're able to recover from that last rate hike. You had 9 rate hikes right in a row, and they're playing a role in slowing things down. And there's just a lot of ways in the real money piece that I talk about that we should still be worried and not so worried about strength.
Now, Jim, last Friday you said during your Action Alerts Plus monthly call that you were more cautious on Citigroup. Now that both Goldman and Citi have reported earnings, what are your thoughts there?
Citi, look, they bought back 9% of the stock. They didn't have the revenue growth that Goldman had. They made money. Now, the 187 was really reduced. There was really 4 cents in tax. They bought back stock in the low 60s. But once again, that's not... J.P. Morgan gave you such a high compare that what would happen is you say, okay, listen, I want FinTech and I want J.P. Morgan. And they don't need to do anybody else. We have too many banks for Action Alerts. I say that because once you saw J.P. Morgan be great, you realize, wow, everyone is going to be hurting by comparison. But remember, these are stocks that sell with very low multiples. So that's not so bad.
And we'll be diving more into the banks, into Citigroup and Goldman Sachs over on Action Alerts Plus, which is our next video after this. But Jim, I just want to ask you, I want to take a step back for a second and look at the investing education angle of the bank earnings. And I'm wondering, what does the financial sector mean for earnings season?
Well, I want you to look at what Deutsche Bank is doing. Deutsche Bank is about a 27% of book. Deutsche Bank has got no earnings momentum. Deutsche Bank has so many problems. And that's the best bank in Germany. So compare our banks and what they can do. And you just see that they earn a lot more, and they're valued they're very, very inefficiently because they don't have a lot of growth. But JP Morgan does have growth, so that should get a higher multiple.
Now, before we move on to our next topic, I just want to remind viewers that Citigroup is our real money stock of the day, which means that you can find comprehensive coverage over on realmoney.com. Kevin Curran already has a scene setter.
Very good stuff, yes.
Yeah, he already has a scene setter on Citigroup. Now, Jim, let's move on because I want to talk to you about Huawei. Now, Huawei is saying this morning that they're open to selling 5G chips to Apple, and I'm wondering, what does this mean for Apple?
Well, I think Apple has to be suspicious of the president wants 5G, but the president doesn't want 5G from Huawei. Now, he did say that he's great friends with Huawei, and we had a really good interview with CNBC where I asked the reporter to say, could you please ask him about a possible boycott of Huawei stuff? He said, no, the president remains good friends with Huawei. That's never going to happen. We need Huawei because it generates jobs, Huawei because it offers great value. And so on the one hand, you don't want to antagonize the president who's talking about a Dow going up 5,000, 10,000. On another hand, you can see how Huawei takes share. Nokia was downgraded by Goldman to a sell because Huawei is more competitive. So I guess Huawei is the cheapest. Some people think it's very good quality, but it is not what the president wants to see. But at the same time, the head of Huawei is saying the president likes them. Very convoluted situation. I don't see Apple switching to them anytime soon.
All right, Jim. And for all of you watching us on Facebook or on TheStreet.com, we are now jumping over to our Action Alerts Plus video. Members Only Club video, had a little choke up there, where we will be zeroing in more on Citi and Goldman, along with more holdings in the Action Alerts Plus portfolio. You can check it out at actionalertsplus.com. Thanks, guys. I'm Catherine Ross, and we'll see you tomorrow.